And I'm so glad, Raghu, that you are joining us because you've been there, done that.
I've been there as a central banker,
exactly.
Yes.
So you've been through those times when people love you, as Tom Honig said, when you're cutting rates, they love you. When you're raising them, they don't. Are central banks really so much at fault? They're getting a lot of criticism right now. Do they deserve it?
They deserve a little, not as much as they're getting. Why? Well, we're in unprecedented times. It's really hard to look through the fog. And you're steering a 100,000-ton tanker, which moves slowly even when you change direction. And you're trying to navigate through rocks. So what do? You do the best job you can, but everybody sort of is there opining and knowing because they can see through the fog, which you can't. That's the situation these guys are in because these are difficult times. The labor market is doing things that, we don't quite understand. Why is it so tight? How is it responding to a slowing in activity? How are wages moving? These are all things that are evolving, that we're seeing as we go. In the meantime, we have the pandemic sort of rearing its head, shutting down supply chains in China. We have, globalization and deglobalization happening. Lots of things happening. And you still want these guys to make perfect decisions. Yeah. It's a tough job. You can maybe sort of criticize them a little bit for being a little late on reacting to inflation. But I think it's hard to say that they've got it completely wrong.
Is this going to create long-lasting pressures, maybe changes for central banks that they were, for example, maybe need to change their operating procedures, or maybe that their central bank independence gets a little bit eaten into?
Well, I think the lesson from all this is central banks can do more by trying to do less. In other words, they've been charged with climate change. They've been charged with, maximum employment, including of minorities. Lots of things which, are better done through more direct policies and are perhaps only peripheral to the central bank's mandate. Instead, if they focused on keeping inflation low, I don't even think they can keep us from too low inflation. In other words, there's a lot of pressure on them to raise inflation. They can't do that particularly well. They don't know how to do that. What they do know how to do is bring down inflation once it exceeds a certain point. I think if you told them that is your job and focus on that and leave all this other stuff aside, it would make the job a lot easier. And I think they would do a better job.
A lot of commentary, maybe more from the markets than from central bankers themselves, that there's a disconnect, for example, between the Fed and the markets. And some people say, well, maybe the markets aren't listening, or maybe they're incredible now because the inflation got out of control. What do you see?
Well, I think the market is embedding its hopes and fantasies on the Fed. So, for example, I think it's very hard to imagine that the Fed raising interest rates will suddenly start cutting them in April. I mean, why would it do that unless there was a massive recession? And that's, it's hard to see that in the tea leaves right now. So why is the market sort of assuming that after raising rates, the Fed will suddenly cut? It's okay to assume maybe it pauses after that to see how the economy is progressing. But you need a really serious recession by April for the Fed to start cutting.
Some people say maybe they're not listening. Some people say maybe this is a generation that has never seen inflation like this, and they just don't understand, no matter what the Fed or another central bank says.
Yeah, it may well be that they haven't seen inflation. Actually, that's the silver lining in what the Fed is trying to do. When the Fed was trying to bring down inflation in the early 80s, it had 10 years of high inflation behind it. This time, when it's trying to bring down inflation, we've had a year. So maybe people don't have inflationary expectations entrenched.
Right.
Maybe they're not all going to go out on the street and say, we want higher wages. Maybe they're okay saying, well, inflation is coming down. Yeah, I was a little perturbed.
Yeah.
But maybe if my wage increase is 5%, that's okay. And next year, back to 2%.
At the last last ECB meeting, European Central Bank, it seemed that Christine Lagarde was saying, well, we're going to be really right in the moment, data dependent, no more forward guidance. And we've got whiffs of that from other central banks. Is that a shift, or is it?
Well, forward guidance was easy when things were really stable. Nothing really moved. And that was what the problem was. You wanted to shift up inflation, and it wasn't happening. And so you were trying to tell the markets you'd be patient so that inflation would move up. Now you're in a really volatile environment. Every day something else is changing, right? So in this environment, any kind of forward guidance is dated very quickly by the data. And so I don't think you can do anything but be data dependent. Of course, with the idea that central banks don't sort of swerve and turn on a moment's notice, they're slow-moving tankers. They will take time to turn.
Well, actually, I remember when Ben Bernanke and his Fed suddenly turned forward guidance into a tool that could actually affect the economy, right, and financial conditions. I wonder, did that get overdone? Are they going to maybe take another look at their toolbox, at their communications, and maybe say, maybe we better just stick to something more simple like interest rates?
Well, I think the problem is events overtook forward guidance. They tried to portray the central bank as being far more patient. We will wait till we see employment sort of go up, unemployment come down. We will wait until these markers happen. And it turned out that even when that happened, you still weren't seeing what you wanted to see in terms of growth and inflation. And so at some point they said, look, we can say all this, but it doesn't have that much credibility.
I want to leave you with a final question from one of my colleagues who is looking at the dollar. There are many different aspects to that, but the Russia invasion of Ukraine and everything that's happened there seems to far from help their currency. It's certainly, or even China's. It's definitely cemented the dollar strength. That's one of the things, right? Do you think when you look at China now, the economy slowing down, all the issues the government's facing now? Yeah. Is there anything that's going to push that currency more to that strong, more dominant position?
I think there's a lot needed to make a currency a reserve currency. And if your question is about when does China assume that place, it requires not only China to be a really big economy, which it already is, but needs deep financial markets. It needs trust in government policy, that government policy doesn't change overnight to favor this set of investors or that set of investors. It requires a certain sense of rule of law, a sense of redress. If there's something that goes wrong, can we appeal to the courts? China has some way to go there. I think the U.S. is already there, but it's the U.S.'s position to lose. And so to the extent that the U.S. becomes unpredictable, to the extent that investors in the U.S. see sanctions applied on their investments, the U.S. becomes a less hospitable place. And that's the sense in which the U.S. has to be careful that it is still seen as a reliable place for people to invest. That will protect the dollar. But being a little sort of schizophrenic about it, going back and forth, that will hurt.